Hello and welcome to another episode of Stock Shots. Please remember, I am not a financial advisor. I'm just giving my opinion based on some things I see, like support and resistance, supply and demand, and of course, some indicators that may be on the screen. So always do your own due diligence. Make sure you educate yourself and always look to the left because we're looking at things that have already happened. Think about what things may do in the future. So this is another episode of Stock Shots. Welcome.
All right, here we go. Let's start off with one of our favorite funds. Of course, we're talking about what? Oh man, it's gonna be good. So here we go with the S fund. Now, this one is going to be the same exact story we're going to talk about with the C fund, and I'm going to tell you why. So, what you see here, these colored areas of they're Fibonacci retracement areas. So, what's happening right now is you have, of course, we had our downturn. We had a very sharp push to the upside. What you need to be wary of is when you get to around this area here, this let's say what that is, 2205 area. That 2205 area is going to be make it or break it kind of thing. So what we're going to do now is we're going to put a box around here. This is in between the 0.618 and the 0.50 on the Fibonacci retracement. And that's done from the high of the move to the low of the move. So I'm going to get this out the way so that way you don't really get distracted from it. And we want to put it here as the golden zone. In this area, this is where we would look to see a reaction. If we're going to push up and never look back, it's going to be a really strong push if it goes past here. If it goes past that 2205 and then it's a two-part thing, people. Past that 2205 and then breaks this 2288 with volume, good volume, then that is off to the races. You're good to go. We're going to get all new highs. If it first and foremost rejects this area. So if it rejects here, we're going to make a new low. We're going to look to break this low down here of 1780 and change. And we're going to be going most likely to these gap areas down here to 1708 and then 1636. So this is the story we're looking at. Now, in all probability, because we don't know what's going to happen, we had this whole Liberation Day thing, and that was a great push to the upside. Yay, yay, yay. But at the same time, until you hear that there's going to be significant proof, listen to me, significant proof that there are brand new trade deals in effect, I'm still in a bearish case right now. Them saying, hey, we got a deal. Hey, we got a deal. Then other people saying, you ain't got no deal. You ain't even talk to us. This is going to keep affecting our funds and the TSP. So now let's talk about the same exact thing, but we're going to talk about it in the C fund. So we are talking about the same thing. It's got the same exact thing going on in it. So if you heard the first part of this video, then you've heard the second part already. Now, the only thing that's different here is that there is a gap in the daily time frame on the C fund. So I'm going to do the same thing. I'm going to mark this area out. Once again, marking out the 618 and the 0.50 in the Fibonacci retracement. That's called the golden zone, and that makes it easier for me to spot things. So I'm going to get rid of the Fibonacci retracement now. And the same thing is true. So my apologies, guys. I had my candles on. I know you need your candles. There you go. And I'll let you see these also with your candles. So there we go. My apologies. But we're still on an uptrend for the S fund until we get to this area up here, which was the 2205. We would look for a retracement down or continuation down. For me, that's what I'm looking for. And the C fund, I'm currently looking for the same exact thing. Like, it's going to be different numbers. So 5,700. If this goes past 5,700 with good volume, okay, then I'll be in to go to a new high. This would be a V-shaped recovery. Until then, I'm looking for a push to the upside and then a rejection down. So right now, I'm not in any funds. I'm still on the sidelines because I'm going to be patient. Uh, I'd rather catch a bigger move to the downside than a small move to the upside. And when I say that, I'm doing this in my personal account as well. So I'm looking for places to get in to short the market or play an option to the downside, make a put. So let's talk about the international fund. In the international fund, we are, ooh, hey, now we're back in consolidation. Nothing has happened. So we came down, we had a great push to the upside. Now, with this being said, all right, you got to break the 85.21. If we break the 85.21, we're going to be good. We're going to go about to this $90 area. So I got a buy signal here. International fund could be good for about $5, $6 movement. And then after that, it may just push around. So it's like, put it this way, every time you see a candle like this, it's not worth transferring your money around just for that's $79 for this candle. Let's see. Yeah, remember this is in a week. So say you missed this big candle because on average you're not going to get these big candles. On average, you're going to get smaller candles. So let's say even if you took this one, that's a like a $3 move for a week. To me, it's not worth it. I'd rather just wait until the actual move is established, and then I can just take advantage of a push to the upside. Now, with this being said, yeah, you can definitely see a push to the upside here to 89. Now, would I say anything further than that? Now let's look back. 88 was the last high. So we would literally be making one, two tops. Now let's put this in a monthly for a better look at this. We would literally be going to the top of the market again. This may give us a slightly bigger push, so you might get to 92 or so. But for me, it's not worth it at this point. I'd rather wait until the C or the S fund comes around and play it there. So let's look at the bond fund and let's see. All right, we're still in the sell signal there. Once again, this is a consolidation zone. So, with that being said, you are looking at an area where price goes and just bounces back and forth until it comes out of here. I don't care. Last time it did, it shot up and rejected, shot down and rejected. In the daily time frame, there was a gap down here around the $96 area going up. It's just another high. So it would have to break first 109 and then or $100.09 and then go to the $102.05. Now, with that being said, I'm not interested at this point because I'm back in this consolidation. So with all of them, I'm still on the sidelines. I'm not going anywhere. So let me see. Let me see. It's one thing. Is it TNX? So here we go. Ticker TNX. This is going to be for the 10-year Treasury. This is going to be something where you're going to know where um, the C and the S fund are probably going to take off. You want to see the ticker TNX as low as possible. This is the 10-year Treasury. The reason you need to see this because the whole reason for this trade war and all this other silliness is to get our ability to refinance our loans lower. How do you gauge that? By looking at the 10-year Treasury. It's at 4.26. Now, when they started the shenanigans, okay, it came down to a low of 3.88. That still wasn't low as previously 3.6. And of course, back here in 2023, it hit a low of 326. But they probably want to get it down as far as possible, 2.53. So how do you do that? Well, you do a lot of silly stuff to get the market down. So you have to pretty much tank the market. Why? Well, when you tank the market, remember, people have to buy debt for us to keep spending money here in the US. So I want to make sure when I refinance my debt, it's at a low rate. But when people are buying my debt, they want it at a higher rate. Well, you have to show stability for people to want to buy your debt. Because remember, if I'm buying your debt, you're supposed to be stable enough where I know you're going to repay me. We're not showing too much stability. So these are going up, but we need them to come down. So keep an eye on the TNX ticker and see when it gets to about probably 3.63. You want to see if they're going to start talking a little bit nicer, if things are going to be better. And with that, I'll see you next week. I hope you learned something, and I'll see you around. Hopefully, you give me a like. I mean, I feel like I did a good service here. So hit the like button for me, and I appreciate it.